So there's this crypto mining company, BitMine, and they just did something that's really shaking things up, not just in crypto, but in the traditional finance world too. We're talking about a massive, massive bet on their own future, and it all boils down to one absolutely mind-boggling number.
Okay, you ready for this? The proposal on the table is to increase the company's shares by, wait for it, 1,000 times. 1,000x. That would bring their total number of authorized shares to a jaw-dropping 50 billion. Yeah, you heard that right. This isn't just tweaking the numbers, this is on a whole other level. Which, of course, brings us to the big question we're going to tackle today. Why? Why on earth would a company do something like this? Is it a genius move, a sign of huge ambition, or is it a giant red flag for anyone invested? Well, let's dig in and find out. Okay, so before we get into the why, we've got to get on the same page with some of the lingo, a little corporate finance 101. But don't worry, I'll make it quick and painless, and trust me, it's the key to understanding what's really going on here. First up, authorized shares. The easiest way to think about this is like a bakery. Imagine the shareholders give the baker a license to bake up to, say, 50,000 cookies. Now, they don't have to bake all 50,000 right away, but they have permission. They have the green light to fire up the ovens whenever they want. The recipe's there, the ingredients are ready to go. So, authorized shares are the potential cookies they could bake. On the other hand, outstanding shares are the cookies that are already out of the oven, sold, and are in the hands of hungry investors right now. See the difference? So what BitMine is doing here is basically asking permission to build a way, way bigger kitchen. All right, so now we know what they're doing, but how does this all plug into their master plan? Because this isn't just about playing with numbers on a spreadsheet. No, this is about building a strategic war chest to fuel 4 key pillars of their growth. Really, it all boils down to 2 things: speed and flexibility. You know, the crypto world moves at lightning speed, and it's incredibly capital hungry. If you have to stop and ask for shareholder approval every single time you need to raise cash, you're gonna miss the boat. Deals will die. This move gives them the power to strike, to pounce on an opportunity the second it appears. So where's all this potential money gonna go? Well, they've laid out a pretty clear 4-pronged attack. First, they can pour money into the latest and greatest mining tech to keep their edge. Second, they can use their own stock as a kind of currency to snap up competitors. Third, they can pay down debt, making their balance sheet look rock solid. And fourth, they can attract the absolute best talent in Web3 with some juicy stock options. It's a textbook plan for super aggressive growth. Okay, but let's switch gears. If you're an investor, someone who already holds BitMine stock, you're probably thinking, whoa, hold on a second. You've got to be asking yourself, how do I balance the potential upside here with the very, very real risks? And that brings us to the number one concern, the big, scary word for investors: dilution. Let me break it down. Imagine the company as a pizza, and it's cut into 10 slices. You own 1 slice, right? So you own 10% of the pizza. Simple. But what if the company suddenly decides to cut that same pizza into 20 slices? You still only have your 1 slice, but now you only own 5% of the whole pie. Your piece of the company just got smaller, percentage-wise. That's dilution, and that's the heart of the risk here. And that right there is the gamble. On one hand, the risk is that your slice of the pie shrinks, but the potential reward, the big what if, is that the company takes all this new capital and grows the entire pie into something absolutely massive. So yeah, your slice might be a smaller percentage, but a smaller slice of a giant pizza could be worth way, way more than a bigger slice of a small one. That's the All right, let's zoom out for a second and look at the bigger picture here. Because what BitMine is doing, it's not happening in a bubble. It's actually a signal of a much, much bigger shift happening in the crypto space. Almost like a digital industrial revolution is kicking off. What we're really seeing is the crypto industry, well, it's growing up. It's moving beyond just being this wild, speculative niche. Now, it's starting to use the same sophisticated, powerful financial tools that you see the biggest corporations in the world using. It's like Wall Street strategy is meeting Silicon Valley tech, and this is the result. Think about it. With this kind of financial firepower, BitMine can completely reinvent itself. It can go from being just a Bitcoin miner to becoming a core pillar of the entire Web3 ecosystem. They could start offering things like staking as a service, providing decentralized computing power. They could even bankroll the R&D for the next big thing in blockchain. They're not just playing the mining game anymore, they're playing a much, much bigger one. And you can bet the smart money is watching this closely.
I saw one investment fund manager who basically nailed it. They said, look, the potential for long-term value here is so massive that the short-term risk of dilution, it's a calculated risk, and it might just be worth taking. It's the classic high-risk, high-reward scenario.
So that leaves us with the big question, right? What does this mean for the future of crypto? Are we watching the final days of the Wild West era? Is crypto becoming, well, more like Wall Street? And if it is that a good thing? That's the 50 billion share question that's going to shape the next chapter for this entire space.